Hello, welcome back. This week we are looking at a critical week for December because going ahead we have FOMC and CPI. And if the FOMC outcome disappoint the market, there is a very high chance that the market is going for a downtrend, at least for 2 weeks. Okay, so why do I say so? Basically, we can take a look at the chart over here. And this is also a reaction to many YouTubers who anticipate a potential breakdown and maybe crash by the Fed. Okay, so let's take a look. Now on the screen, you can see the Dow Jones average index. So what we are facing is that the market is preparing to break down. As you can see, we had a bad closing on Friday. So last week, we were anticipating the uptrend may continue, but unfortunately, the ISM data on Monday shows that the inflation is still high. And then the PPI also did not drop as the market expected. It did come down. It did come down. So it was lower than the previous month, but the market still didn't like it. So they are selling off in anticipation of a potential higher rate hike from the Fed. Okay, so you can see here from the chart here. Okay, so we have the lower high already formed, and another breakdown, we may see more downward action. As also from the image, you can see that the change of trend already takes place, because previously when you look at the trend, it was a low, higher high. So now we have a low that is lower than the previous low, and then a lower high. So this is a warning sign. Okay, so if a full breakdown were to happen like in the past, over here we can see a breakdown. This breakdown was the CPI number when it was announced. Okay, so it actually came down, then after that breakdown over here. Okay, now let's take a look at S&P 500. We can see S&P 500 indicator is ascending triangle pattern and break down this uptrend line, which is also not a good sign. And then we have the low coming to test this support level. So if I plot the support level here, you can see there's a zonal support, and I'm going to change the color to make it clear. So we have the zonal support over here, and if it breaks down below 3,906, which was the previous resistance support, and a minor support over here, once it breaks down, then we may see some more downside. The next key support will be around 3,697. So this is a important week ahead. Nasdaq Composite, we can see Nasdaq moving towards a sideways. As we can see, it's tested the same low, managed to hold at this major support at 10,974. But the thing here is that the rebound has to be substantial, because we can see an inverted hammer on Friday's close, but then it is still early. So a breakdown of the support similar to the Dow or S&P 500, we can see more downward action towards this support level around here, around 10,330. There's a gap to be filled. As I mentioned last week, gaps are meant to be filled, and if you really get sucked into this black hole, then of course the downward action will continue. So S&P 500 also has a gap over here, and then the Dow, we have a small gap over here. Okay, so next week will be a crucial week for the US market. For the Hang Seng market, we see uptrend continually, or rather it continues its uptrend. And what we are looking at, this strong breakout is a good sign as China reopen. and Hang Seng celebrated by pushing towards this resistance at 20,188. Okay, so if the uptrend were to continue, we shall see this level get tested. Next, STI. STI is a major at a support level similar to the US market. So STI is caught in between, and you can see STI is at a critical moment because STI actually is in a formation, a topish formation called the double top. And the reaction low to break is here, okay, which is around 3,221. And if STI were to break down from there, then it's going to be sucked into this black hole, and we can see a potential movement that goes beyond the dark hole or the black hole towards a projected level at around 3,133. And that is still far from its key support level, and there are more gaps to be filled. So STI is actually also very critical. So we have a critical week going forward. So let's see whether the Fed will reduce the interest rate at 0.5 basis point. This is what the market is concerned with. And then the going forward interest rate pace is also important. And then, of course, the CPI numbers. So that if the CPI number comes down, hopefully is within expectation or beyond expectation, then of course the market is going for a rally. And we are looking at the market to continue this rally towards January if these numbers are good. All right, so see you next week. All the best to everyone. Goodbye.